This is the general ledger for Lopez. Now notice I put the assets, expense, and dividends on the left-hand side because they increase on the debit side of the account. Liability, shareholders, and revenue, shareholders' equity and revenue increase on the right-hand side, so I place those T accounts on the right-hand side of the sheet. And now we're going to take each journal entry and begin to post them to the ledger. For example, the first one is a debit to accounts receivable and a credit to cash. So therefore, debit accounts receivable, number one, I've numbered each of these journal entries, and credit service revenue, $60,000. Now, in this next one, I debit dividends and credit cash. So number two, a debit to dividends, and number two, a credit to cash. And truck and accounts payable, a debit of $20,000 to truck and a credit of $20,000 to accounts payable. So whatever I said in the journal, I now post into the ledger. Continuing on, I have a debit of cash, $22,000, and a credit to accounts receivable of $22,000. Then I paid my accounts payable, so it's a debit to accounts payable, $16,000. And a credit to cash, $16,000. Then I have supplies on hand, entry number 6, a debit of $4,000, and that was on account, so the credit is accounts payable, $4,000. Now to finish off, then I have cash and I earned revenue, so debit cash, $32,000, and number 7, credit revenue, $32,000. Then I have the expenses, utility expense, debit, $1,200, credit cash, $1,200. Then I have finally the last two expenses, miscellaneous expense, $600, credit cash, $600, and salary expense, $28,000, and credit cash, $28,000. Notice we always debit the expense accounts. Now that completes the posting of the general journal entries to the general ledger. We begin to summarize by adding up the debit side of cash and subtracting the credit side. Same with accounts receivable. On accounts payable, we add up the credit side and subtract the debit side. And what we're going to do is test to make sure that the accounts on the left-hand side are debit balance accounts. That total equals the credit balance accounts. And so we take a Lopez trial balance for the month ending June 30th. And there we have cash debit, $78,002. Accounts receivable, debit, $68,000. Supplies on hand, prepaid insurance, prepaid rent, buildings, $320,000. All debit accounts. The accumulated depreciation is a contra asset account, so it has a credit balance. Truck and accumulated depreciation truck is a contra asset account, so it too has a credit balance. Accounts payable, of course, capital stock. Now this retained earnings is the retained earnings at the beginning of the accounting period. Now we have to close the revenue and expenses into that to increase it for this accounting period, but at this point we are only testing our debit and credit balance accounts. Revenue, credit, and my debits, I have equal debits, $640,800, and equal credits, $640,800. So now I know that after journalizing those journal entries, my general ledger, and posting them to the general ledger is in balance. I can now proceed to analyze the adjusting entries. And that's what we will do in the next video. Now, I've demonstrated the worksheet in Chapter 3. I'm not going to demonstrate the worksheet again. I'm going to go directly to the adjusting entries.